Yeah, I wanted to take a look at Netflix and look at the expected move on earnings yesterday. How much did it move today? And what can we learn about trading volatility, right? So call this earnings and trading volatility. That's the topic. It seems like Netflix moved a lot today. I mean, it's up 13%. I think it goes up as much as 15, 16%. So I thought it would be enlightening to go backwards in time and see what was priced in yesterday, and whether this actually moved more than expected, the same as expected, or less than expected, and what that means about who made money today and who lost money. And listen, I'm not talking directional here. It's obvious that if you had something bullish going into Netflix earnings, you made money today. Bears lost. That's a given. But not very many people are brave enough to bet directionally into earnings because it's like betting on a coin flip. I mean, how are you going to make money consistently with that? You're not. Half the time you're right, half the time you're wrong. So it's not an interesting proposition. What's more interesting is the discussion of the magnitude of the move, right? How much did the stock move on earnings? And a new trader will think, oh, well, it went up 13%. I mean, people who quote unquote bought volatility, who were betting on a big move, they had to have made money today. Well, did they? Did they? It's not as simple as you might think. Matt and I have talked about this a lot. You know, the stock market is efficient, and the options market is largely efficient as well. And so things that are obvious are usually priced in. Okay. And so in this case, what we're going to discover is most of the move today in Netflix was baked into the cake. Okay. So this will also teach you how to use a handy tool in Thinkorswim known as ThinkBack, where you can go backwards in time and see what the pricing was before today. Okay, before today. So if I go to the Analyze tab, this little button that says ThinkBack, you'll see that it, like the name implies, it allows you to go back in time and look at the pricing on previous days. Well, today is October 19th. Yesterday was October 18th. This is showing me the end of day pricing yesterday, October 18th. And Netflix closed at $240.86 yesterday. Okay, today it's at $272. Okay, so essentially the change is about 30, 31, 32 bucks. Well, if you look at the top here, this market maker move was 28 and a half bucks. That essentially tells you what was priced in on the earnings. Okay, and that basically is trying to isolate just the gap. Okay, if we're talking about the expected move over a week, earnings is just one day of that week. Okay, so the market maker move really is like the one day overnight move. So what's interesting about that is if you look at how much we just moved, okay, 28 and a half bucks is what was priced in. We just moved 32 bucks. Netflix did move more than expected, but not by much. But not by much. One of the simplest ways to look at what's priced in, instead of using the market maker move, or maybe in addition to that, is to look at the cost of an at the money straddle. Okay, which might be redundant because I'm pretty sure by definition a straddle is at the money. At any rate, there are options that expire on Friday. Okay, and yesterday they had 3 days left: Wednesday, Thursday, Friday. You would have been buying this on Tuesday at the end of the day, right before earnings. The pure way to bet on the move, the gap on earnings, is to buy an at the money call and an at the money put. So with Netflix trading at 240, you would have bought the October 240 call for 15 bucks and the 240 put for about 15 bucks. The net cost was almost $30 for that weekly straddle with 3 days to go. That means one of those days was pricing in the earnings move, and then you had essentially 2 or I guess 3 days of time. And so you'll notice that the 3 day straddle was almost 30 bucks and the market maker move was $28.50. The discrepancy is because the straddle has earnings plus 3 days of time. The market maker move is really just trying to look for the overnight gap. And naturally, the stock's going to move more over 3 days than just 1 day or the earnings gap. At any rate, if you look at that $29.67, that 240 straddle, okay, the value of that today, go to today's pricing, go to Netflix. We now have 2 days. If you bought that straddle, you put up the $30, your put is basically worthless because we gapped up, and the call is deep in the money. So that straddle's trading for about $34.19. Yesterday it was basically $30. So what the point I want to make here is how stinking hard it is to make money betting on a big move using something like a straddle. Okay. In theory, you got this nice V-shaped risk graph, which means if the stock goes up a bunch, you make money. If the stock goes down a bunch, you make money. But it's not as easy as it seems because a lot of the moves are already priced in. It's got to move a lot more than expected. And as epic as it might seem, Netflix up 13, 14% seems like a big move. Percentage wise, if you bought this thing yesterday for around $30 and it's worth $34 today, you made, well, $4. I'll go over 420, and the price was $29.70. You've made about a 14% return. Now you might say, well, that's in one day, Tyler. In one day, I made a 14% return. Yeah, I know, but do you know what the risk was? You paid $30 for that straddle. What if Netflix didn't move? That straddle could have opened at $20, and you lost a third of what you paid, right? And so buying a straddle into earnings, even when you get a seemingly big move like what happened in Netflix, didn't make a whole lot of money. Didn't make a whole lot of money. And you may say, well, Tyler, I could hold out. And what if Netflix goes up again tomorrow and the next day? Then I'm really going to cash in. That's true. That's true. I'll grant you that. If you get follow through, that's where really you're going to get your payday. But I just want to point out, as epic as that gap was in Netflix, talking about a 10, 15% return on the long straddle, which maybe isn't as good as you would have thought. So keep that in mind next time you trade earnings. That is a way of knowing what's baked in. Hopefully that teaches you a little bit about how options are priced, how earnings work, and also how to use that think back tool to go backwards and see what was priced in yesterday as a learning experience.